Yo, yo, what's up, ladies and gentlemen? And a happy good morning to you. Very good old morning to you. Hopefully you guys are doing great. Having a good morning. You guys are feeling great. How's the audio? Sounding good today? No background music, nothing crazy. All right. Hunter, what's up, buddy? Daniel, Gino, Shannon, how we doing this morning? Good morning, ladies and gentlemen. Hopefully you're having an amazing Friday morning, guys. It's the end of the week. Finally, the end of week number 2 of 2023. And I tell you what, yesterday was a great day to definitely have a good little day in the market. Carry some of that momentum over into today, and really just looking forward to ending the week strong, guys. Ending the week strong. I don't care if that means profitable, break even. Like, I'm just looking forward to ending the week strong. Ideally profitable, but most importantly, strong, right? Let's get to it. Let's make it happen. It's officially 8:14 in the morning. We're diving into the pre-market rundown. This is a consistent everyday live stream that I'm putting together here on YouTube, all right? It's the pre-market rundown show. Basically, we're going to show up, give you the rundown here in pre-market, exactly what we're looking at for today, and really try and help you guys explain why we're looking at these stocks as well, so you guys can get some education here. And then when we have some time left over, we'll absolutely get to your questions, comments, and make sure that you guys are walking away with all the help that you need. All right, so let's do this. Let's start the first 15 minutes, maybe with some Q&A. How you guys doing? Do we have any questions lingering that you need help with right now at this point in time? Then we'll dive into the official pre-market rundown, talk about the top stocks, get you guys prepared, and then that's a wrap. Enjoy your trading day. I'm going to be working with traders inside of chat, making it happen, and like I said, ending the week strong and ideally profitable. So let's get to it. Let's make it happen. Yes, if you are over on TikTok right now, please come join us over on the you-know-what. If I say it, they may ban me, and I'm the freaking streamer. But no, come join us over on YouTube, right? For the pre-market rundown, you guys can see my scanners, you see my charts, you can engage, ask questions, all that good stuff. Links in the bio. We should be good inside of chat as well. Let me just go ahead and one sec. Let me just make sure that we're all set here. Yeah, we can definitely flip back and forth. Looks beautiful. I like it. Yeah, we can stream that right inside of chat. That's sexy stuff. All right, cool. Sounding Chris Shannon saying Friday the 13th. Let's beat Freddie and Jason in the market. Let's get it. Let's go. Let's make it happen. I love it. Ed, what's up? The man, the myth, the legend, Mr. Ed Nevis. What's going on, man? How we doing? Do you have any examples of a cup and saucer strategy? It's just the opposite of a head and shoulders, correct? So, number one, Hunter, I've actually never in the 7 years, excuse me, I'm getting sick, of trading, of a cup and saucer. Do you mean a cup and handle? Like a cup and handle formation? We were discussing that a little bit yesterday inside of chat, that we were starting to see a bit of a cup and handle formation there on the SPY at one point in time. If you mean cup and handle, I could possibly find an example of a cup and handle. I mean, I don't really trade, patterns. I don't trade the cup and handles. I don't trade the bull flags and the bear flags. I don't really trade the ascending triangles and descending triangles. I trade levels of support and resistance, supply demand, take into consideration volume at those levels, price action at those levels, and then if there happens to be some kind of pattern or formation as I'm already looking to get involved in said stock at a certain level, then it only really helps validate the trade just a little bit more. So as far as like examples of a cup and handle, let me see how I can do this real quick. I mean, off the top of my head, I can't tell you. Actually, hold on. Give me one sec, guys. Go ahead and mute that real quick so you guys don't get that feedback. Cool. But yeah, like as far as like off the top of my head, like what's the last stock that had some kind of cup and handle formation? I mean, you didn't really have anything play out yesterday with the SPY, but you were kind of seeing something develop that indicated a possible cup and handle where the stock, you say, opens. In this case, we opened, we dropped straight down and put in this big U shape right back into that level of resistance, right? So we could say that the open here is resistance. Okay, so here's resistance, big U-shaped formation right back into resistance, followed by a higher low U-shaped formation that typically leads to a breakout and a rip to the upside. So cup and handles, it looks like a cup and it looks like a handle, as you guys can see. Right? So you have that big first U shape. That would be your cup. And then you have that higher low U shape. That would be your handle. These are considered to be high of day continuation formations, right? Where you actually see that resistance at a high of day, and they're intended to break over high day and continue to the upside. So they're breakout formations, they're high of day continuation formations, and that's a cup and handle. Now, if you see this to the flip side, where you have, like, say, support, you get this big bounce, and it comes back down to support, bounces again, but puts in a lower high. You could say that's an inverse cup and handle formation, right? An inverted cup and handle. But that's what you would have there, buddy. All right, does that help? Does that make sense, man? Awesome. And yeah, give me one sec. I'm running some issues with the PC again. I'm gonna have to go get a new PC today. So give me one sec, guys. I know we just launched this whole live stream ordeal like a week ago, and we're kind of every now and then running into some like technical difficulties. And right now I'm running into a lot of technical issues. I got my computer spazzing out. I got my stream inside of the community for members currently dropping. I'm not sure why, so if you just bear with me for a few moments, let me see if I can get this fixed, and we'll go from there. But yeah, any other questions, definitely drop those. I want to make sure that we're good across the board. I keep buffering out pretty bad, so I'm gonna have to just kind of try and get some stuff dialed in. But anyway, yes, you can see it now. Fantastic. All right, cool. So that would be an example of like a cup and handle, and then like an inverse cup and handle formation. But again, guys, I don't really trade, these typical, patterns, right? Like bull flags, cup and handles, ascending triangles, descending triangles. One of the biggest reasons why I don't trade, patterns in the market is because they're highly manipulated. It's easy for an algorithm to create such a formation based on price action to get a retail trader to spot that pattern, to spot that formation, to take trades based on it. And they're not real high probability setups. They're not high probability trades. They used to be, right? When I started trading, you would see bull flags rip and run all the time. You would see ascending triangles. You would see the cup and handles, the red to green moves. Times have changed quite a bit over the last couple of years, where that approach to trading isn't as consistent as what it once used to be. So you have to kind of just readjust a little bit. And how did I readjust? Really just diving more into mastering support and resistance, price action at these levels, supply and demand, volume price analysis, taking all of these things into consideration to really identify my new edge in the market. And that has been a strategy that's worked very, very well for me, versus just sitting here trying to find certain like patterns and formations in the charts that are extremely manipulated. Gino's asking about TNXP. All right, so yeah, TNXP was a short squeeze, kind of like alert. I remember this one back in like July where we were looking at this one, looking to trade that for a moving average squeeze. It was extremely high, short float percentage as well, but it didn't really do too much middle of the year and just kind of tapered on off. Now, what are we starting to see in the market? You're starting to see a lot of, stocks moving on the hype of a short squeeze, right? So like Reddit short squeeze mentions this week, you got BBBY, go check that out. TRKA, PRTY, GROM, APRN. You got a lot of these short squeeze hype stocks from social media, from Reddit that are starting to get some action. So that's what you got right now with TNXP. Now, if you're looking at TNXP and if let's say you're already in this one, and you're looking for like a target, I would just put a target up there, right around the 200-day moving average. If you can break above like 124, you see some of that support here at 124 on the daily. See some of that support here at 124 on the daily, and you see how we came up and pretty much stopped right around that level here yesterday. It's a solid level of resistance. So if we can break that level of resistance, that's going to bring in more hype, more attention. Most likely a lot more traders to really push this to the upside. And then you look left, look at the daily chart again. If it breaks that level of resistance, where could it go? Well, the main level of resistance would be the 200-day moving average up towards around 181. They're just now looking to get involved with TNXP. I don't think it's a great idea. Now, you could get lucky and it could continue to move, but there's a couple things that you have to notice. You have to realize and notice that, hey, this stock just moved 269% in a couple of weeks. The other thing you have to notice is, hey, it's gone from oversold conditions in the RSI to extremely overbought. And when you look at that stock, you can clearly see it's really overextended. And then you always have to ask yourself, these questions when you see stocks like TNXP, because they can be, appealing, right? You feel like the stock could run another 100%. You feel like you're going to miss out if you don't get in, right? Those are your emotions taking over. The fear of missing out. Like if I don't get in here, I'm going to miss the next 200%er. But let me ask you this, and these are questions that you have to ask yourself before you get into trades, such as TNXP or really any trade. If you were to be in the stock at say 50 cents and the stock hit $1 yesterday and you realized, wow, I'm up 100% on this trade in just a few days, what would be the very first thing that you started to do if you were in the stock at 50 cents and it was coming up into $1 and you're up 100% on the trade? What do you think you're doing at that point in time? You're taking profits, right? 100%. If I was in the stock at 50, 60, 70 cents and the stock hit $1, $1.10, I'm taking profits. So you got to think that most traders are thinking the same way. I'm up 50%. I'm up 100%. I should be looking to lock in profits. I shouldn't be looking to buy here or add here because it's really overextended. It's overbought. It's running into a level of resistance. You got to think that everybody that was getting in along this push, they're starting to take profits as we are coming into some very strong levels of resistance, and it's very overextended due for a pullback. Now, there's a lot of hype still with these short squeeze Reddit mentions. I mean, BBBY, it just doesn't stop. We were talking about this one yesterday. Someone said, hey, should I swing trade BBBY? And I said, listen, if I see a stock that's already up 100%, 200%, I would not swing trade that stock, right? If you would have swung trade that stock, you could have made a couple of bucks. You'd actually be a little red, but that question was in the morning. Hey, should I get into this stock and look to hold it for the next 24 hours? If you would have done that, you would be green right now. I call that luck. You would have gotten lucky. You could have gotten in at $4. The stock hit nearly $6. You would have gotten lucky and made some money. But here's the deal. When stocks are overextended like this, they're due for a pullback, and you just don't know when the pullback's going to happen. So swing trading a lot of these stocks after they've already moved 2, 3, 4, 500% to the upside is just very, very risky. Now, if you accept the risk ahead of time and you position yourself correctly like a professional, then you could trade these stocks. You can swing trade these stocks. But if you're a newer trader, you have limited capital, you don't have FU money, you don't have money that you could literally just throw out the window and not care. You don't have a what I call a YOLO account, right? Where you're just like, whatever, $500 in the trade. If I lose it, I lose it. If you don't have that type of capital, if you are not yet that experienced to be able to position yourself correctly, you should not be trading high risk stocks like BBBY, especially swing trading, right? But if you're someone like me, I've been in the market for 7 years, right? Who knows? Maybe the stock gets the $9. I got an extra grand that probably going to go spend it at the casino anyway, so might as well throw it into BBBY and see what happens. I don't care if I lose $1,000, for example. Then okay, my maximum risk is my investment. So then I position myself correctly in the trade. But a newer trader that has a $5,000 account and they're looking to grow it consistently, taking risky trades like BBBY, you're just asking to lose money. You're really asking to burn yourself, to blow up an account, to lose money, and then be out of the game completely. Your focus is consistency. Your focus is base hits. Your focus is growing that account little by little by little. Become confident, become a master, acquire the skill set, be great at this, build up your wealth, build up your account, and then you'll eventually be in a position where you have that money, that extra $500, $1,000 in a YOLO account that you just don't really care what happens. And you can definitely do in trade stocks like BBBY when that time comes. But as a newer trader that's limited, you got to stay away from these really, really, really risky stocks. You could get lucky and hit a nice home run, but there's no way you should be, no reason you should be trading the stock after it's ran up, almost 500%. Kyle, what's up, man? APRN. Yeah, so I got APRN on watch today. If this stock can ever break above like 145, you see we have this little gap fill over 128. You see that 128 break? If we can get it, got a little gap fill back up to this 145 daily level, which actually puts you right at that post-market high at like 144. Then you can see that we still have some great potential to the upside, right? If we can start to break through that daily gap level of like 144, and we could get a break of 150 as well. Here with APRN, you could see that we have some potential up to 184 and then $2, right? But we got to get that 128 break. And right now, looking at the daily and looking at our intraday chart, we have support at 109, and it just is struggling to get that break, right? It's struggling to stay above 128. It's struggling to get that leg on up. There's a lot of sellers present. There's a lot of selling pressure. Don't get me wrong, 50% of the flow is short. It's another Reddit short squeeze mention. It could absolutely go bananas, but right now, there's definitely not a reason to be getting involved. But it's going to be on watch just to see if it does, start to get some action to the upside, start to get some attention. As again, 50% of the flow is currently short, and it's a Friday, and Fridays are notorious for short squeezes. So you add those two things together, we may have some action today with APRN. So we'll have to see. Hunter, is it best for new traders to focus on one or two stocks to trade? So if you're a newer trader trading penny stocks, there's never going to be one or two stocks that you always focus on. There's always a brand new stock every single day with a penny stock, right? Every now and then you get some multi-day movers to where you're watching the same stock 2, 3, 4 days in, sometimes a couple of weeks. But let's be honest, every day that we're coming into the market at 7 o'clock, we have new fresh stocks that are gapping up based on news, and we have new runners for the day, new opportunities. So if you're trading small caps, you're trading penny stocks, it's going to be really, really hard to find one or two penny stocks that you can trade consistently every single day. So what I wish I would have done as a brand new trader was actually master trading the SPY and options first. Believe it or not, the SPY with options to get that focus down, to get that skill set acquired. And then when I had some consistency as a trader, then started to go look at the penny stocks, the high volatility movers, the low float spikers, right? So 100%. As a new trader, my biggest recommendation is focus on the SPY. Okay, focus on one strategy. Focus on one contract. Like literally keep it that simple. The SPY, one contract, say the closest to expiration, a consistent delta, because the delta is going to be how you manage your risk to reward, and one strategy. And just put in your reps. Put in reps. Put in reps. Do it over and over and over and over. Get 50 trades. Get 100 trades of that one strategy with one contract on the SPY. Then you can go back and look at the data. Like, all right, cool. I just took 50 trades. 35 of those trades were green. 15 were red. Okay, not too shabby. 60-some% win ratio. All right. My average winner was $100. My average loser was $50. Okay, that's fantastic. I have a 66% win rate. Consistently on average, I'm hitting about 2-to-1 risk reward, right? 2-to-1 setups, 2-to-1 risk reward. Fantastic. Got that 66% win rate. That doesn't look too bad. And my gainers are double than what my average loser is. That's a consistent strategy. Wow. You feel confident now. You feel on top of the world. I got 50 trades in, and I can see that if I were to do that with real money, I would actually be pretty impressed with myself. That's a good strategy. That's a consistent strategy. Okay, now it's time to actually transition that into a live account, right? To build the emotional tolerance, right? To really learn how to control and suppress and regulate your emotions. But yeah, in the very beginning, you got to just focus on one thing, the SPY, one contract, one strategy until you master it. And then you can do the next strategy with the SPY until you master it. The next strategy with the SPY until you master it. You can tweak the strategy. You can fine tune the strategy, based on the data after you review it. And then once you have a consistent edge, a consistent strategy in the market, say trading options on the SPY, then you could kind of branch out and start looking to trade Tesla. Tesla's going to move completely different than the SPY. It's a completely different game. Trading the SPY and trading Tesla, two different animals. You got to trade Tesla completely differently than you would trade the SPY, right? NVIDIA, same thing. You got to trade it slightly different. Apple, you got to trade it a little bit different because you don't have as big of moves with, say, Apple like you do on Tesla. So everything's going to be slightly different, but focus on one thing until you master it. Then start adding on. Then start building on and just advancing your skill set as a trader. That's all you should be doing, right? If you're a newer trader, and this is just coming from experience, one thing that I wish I would have done as a newer trader, looking back 7 years, is just focus on trading the S&P 500, okay? Options. It doesn't even have to be options, to be honest with you. I mean, I could have been on a paper account trading the SPY with, say, one share, right? One share on the SPY. The point here is not to make money. The point's to get data. That's it. Like one option on a paper account or one share on a paper account. It doesn't matter. The point is, I wish I would have just focused on the SPY and focused on one strategy until I mastered it. And then the next strategy until I mastered it. And then the next one. And I'm like, wow, I feel pretty confident. Time for a real account. Now I got a small amount of money in a real account. Building that emotional tolerance to it, controlling the emotions, regulating the emotions, right? And then I'm feeling confident. I'm actually making real money. Time to size up, scale up my position size. Now I want to branch out and learn, how to trade penny stocks, those volatile 500% rippers. Then I want to go learn how to trade futures. But the first thing is I want to master one thing and then get to the point where I feel confident enough to start trading that in a live account to actually see real results and real money, and then build on top of that. Like one step at a time. You can do that with anything. You can do that in the crypto space. You could do that with... So here's the thing. Why do I keep saying the SPY over and over and over and over? Because the SPY is always going to be here. It's a consistent mover. There's always some kind of volatility and movement with the SPY. You could trade the SPY nearly every single day, right? Like you can't trade JSPR every single day. Tomorrow you may be looking at APRN and then AMV and then KPRX and then GROM, and the floats are all different and the average volume's different and how they move is completely different. You're never going to truly find the consistency you're looking for if you're all over the place. So why do I keep saying like the SPY, for example? Because you could always come into the market And 90% of the time, find an opportunity to trade during the day. Like, you have an opportunity to test trading on the SPY, that one strategy or two strategies that you're testing with consistency and focus, just one stock. And you get to know the one stock, how it's moving, certain days with economic data, certain weeks with earnings. Like, how does it move? You get to know it and you become very, very confident with it. Compared to crypto, you're all over the place. Penny stocks, you're all over the place. You could do it with futures contracts, right? You can do it with futures and just trade the ES or the MES. You could do it with Forex and just trade one currency pair, the most liquid currency pair. But it's really challenging to really get that foundation built, in my opinion, trading penny stocks, because you're just all over the place, right? And trading, just options on Tesla and Disney and UPS and Microsoft, because everything starts to vary just a little bit depending on the stock you're looking to trade. You got to get some consistency under your belt first. All right, and that's it. I want you guys to build a good foundation, right? Don't you guys want to build a good foundation? All right, don't you guys want to build this massive, tallest building in the world, skyscraper, right? Yeah, of course, right? You want to build a trading career. Maybe you don't want to do this full time. Maybe you want to do this for an hour a day, part-time, when you have some downtime, just to make a couple extra few grand a month, right? There's no cap on how much you can make, but in order to get to the point that you want to get to, you have to build a strong foundation. You have to. You cannot build this massive skyscraper on a weak foundation. It's going to fall apart the taller it gets, right? You think you're going to build on top of this weak foundation and learn pennies and futures and options and 2, 3, 4 contracts in a paper account. Now you're doing this, now you're doing that. You're all over the place. You never get that focus in. You're not dialed in, and you don't really learn that one thing until you master it. You get 50% here, and then you're on to the next thing. You get 50% there, you're on to the next thing, until no one ever gets 100% of I've firmly, truly mastered this one thing. 100%, now it's time to move on. They're all over the place. If you want to be a good trader and you want to potentially do this full time, or at least be consistent enough to make some money when you participate in the market, you got to build a strong foundation. You have to. And if you're not willing to do that, you should not get involved in the market, because the odds are you're probably going to lose your money. And then you're going to blame the market for the loss. Well, it's not the market, it's you. You have to build a strong foundation. And you got to be willing to put in some of that crappy work ahead of time, some of the work we don't want to do, but we got to be willing to do some of those things in the very beginning to build the strong foundation. Then things become fun because we're making money and we enjoy it and we're good at it. Like, we take losses and we don't care because it was a good loss. We're having wins and it's fantastic. We just made some cash in the market. It feels good. We've acquired the skill set. You can't take that away from anybody, but you got to build the foundation first. Josh is the GOAT. I know. I mean, thank you, but I know. I don't like toot my own horn or anything, but yeah, I know. Appreciate you though, Parker. Appreciate you. So yeah, that's great advice. I've been watching and trading the market for 2 years, and you've been burned for not doing exactly what you just said. And I was in the same boat. Everything that comes out of my mouth is from experience. I'm not just pulling it out of my you-know-what and throwing it and hoping it sticks. Like, no, this is all from experience. What do I wish I would have done differently as a newer trader in the beginning to see better results a lot faster and not lose all the money that I lost? Everything that comes out of my mouth is exactly what I wish I would have done different. So if you're a new trader and you hear that, you're like, oh, wow, he's already been through the BS. Right? He's made all the mistakes. He's been on the verge of quitting, right? But he pushed through. He broke through, and he is where he is today. Oh, wow. Maybe I should take some of the recommendations and apply it, versus thinking I know everything, that I know what the best course of action is, right? No, like, seriously, focus. Build that foundation, right? Don't focus on indicators in the beginning. Don't focus on patterns and stuff like that. Don't focus on that. It's irrelevant, right? An indicator right now, as a newer trader, it's irrelevant to your trading. It's not going to help you. You don't need to go learn the VWAP. You don't need to go learn the MACD. You don't need to know what the Fibonacci retracement spiral sequence. You don't need to learn that in the very beginning. That's not going to help you build a strong foundation. Josh, I just want to say thank you for everything you do. More than you know, you are changing people's lives. Hunter, bro, I appreciate that, man. That just made my day. Thank you for saying that. You know, sometimes I forget that I'm actually impacting people and I'm helping them change their lives for the better, not just as day traders, but getting serious with their longer term investments to take it serious. You know, good, healthy personal habits, morning routines. Like it's a good feeling knowing that there's definitely some of you guys that see that feel that, and it makes me feel good because that's why I do what I do. That's why I do what I do. Appreciate it, Hunter. You made my day, boss. I'll give you a big old air hug. Troy, what's up, man? Good morning. Do we have any penny stocks for today? We do have some pennies for today. You got AMV for the mid-candle breakout. You have KPRX for the moving average squeeze. You got GROM for the daily gap fill up to $3. You got APRN. Could be a short squeeze opportunity for today. It's a Reddit top mention for short squeeze. It's 50% short at this point in time as well. So, I mean, we could see some of that short squeeze type of action with APRN. You got ZVSA that has some potential, but one thing you've been noticing a lot of in this market lately is a lot of these pre-market top gainers are not really doing much at the open. They're very choppy. Most of them kind of dump on off, and you're getting end of day action, right? A lot of your top gainers have all been ripping end of day. I mean, look at BBBY. There's literally not a lot of price action. I mean, not a lot of good movement here with BBBY out of the gate into lunch hours, but then it starts to really rip towards the end of the day, right? Look at BKKT. This stock became a top gainer after 2 o'clock when it ripped from 140 to $3. So what you're noticing is a lot of these top gainers in pre-market really aren't doing all that much at the open. A lot of them are kind of just rolling on over, fading, and dumping on off. So, you know, HEXO, it's a top gainer. Do I really want to put all of my focus on this stock right at the start of the day? I mean, probably not, knowing the market conditions are chop, 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 chop. A lot of things dumping on down. And then the best opportunity comes towards the end of day. So do I really want to be participating in, you know, penny stocks left and right at the start of the day? Probably not, right? I don't want to be all over these stocks right at the start of the day, knowing that they're probably going to chop, not do a whole lot until the end of the day. So I'd rather preserve the capital and put my focus where the opportunity is. And I believe the opportunity will come into the day like it has pretty much every day this week. But there are stocks to watch. But is there a stock right now that it's like, if it breaks this level, I'm getting right in? I don't see anything. We'll watch HEXO. We will watch ZVSA and see if we get some opportunities here intraday. You got APRN for the possible short squeeze. It just has to set up. You got GROM that has potential to fill that daily gap. It's just got to set up for us. KPRX for the moving average squeeze, and then AMV for the mid-candle breakout. That's what you have right now at this point in time. Anything to get in right now before the open? No. Anything that happens at the open that would bring me into a trade? Not just yet. Right? So I'm going to probably sit back at the first start of the day and really look to see where traders go. What's that number one stock that traders start landing on? You know, is it going to be JSPR? I mean, we'll see when the market opens. Is it going to be GROM? We will see when the market opens. Wesley, I never received an air hug from you after an entire year of support. No, you did not, Wesley. You're right, because I gave you a lot of air kisses. Mwah, mwah, and a mwah. I kissed you a few times. Closed my eyes. I think about you. Reached on over. You slapped me in the face. Said not too much. I reached back in for the kiss. Slapped me again. Felt good, man. Felt great. What's up, Wesley? How we doing? So those are the pennies for today. You know, a lot of my focus is going to be here on the SPY at the start of the day. And the biggest reason is we just went from the bullish side of the trend line to the bearish side, and we're starting to crack below our 393.63 resistance level. As long as we stay below that 393.63 on the SPY, I am expecting the SPY down at 390 today. And if we see a lot of movement with the SPY, I'm expecting the SPY to crack 390 down to 385. I'm expecting that to take place. So I'm definitely going to be short below 393.63 here on the SPY. Down to 390.12 and then 385.85. Yeah, yesterday was fun. You know, we made a really good day yesterday. All I can say is we absolutely dominated it yesterday. It was a good day yesterday in the market. We traded CPI properly, locked in some amazing profits there. We had a couple entries on the SPY. Locked in a few $100 on the options account. And then we did okay with some of those pennies out of the gate, but not tons of opportunity. And I don't trade afternoons, so I don't even come back in the afternoons. And that's when everything started to really rip on up. So we'll have to see what happens today. But I'm definitely leaning towards the short side. Right? Definitely leaning towards the short side here on the SPY today. Angela, what's up, Angela? What are my thoughts on SoFi, Angela? So as far as what are my thoughts on SoFi for like a day trade opportunity, or what are my thoughts on SoFi, say, long term? What are we thinking there with SoFi? Day trade opportunity, swing trade, long term. What are we looking to accomplish here? Yeah, and reminder, thank you, Corey. Markets will be closed here on Monday. So we've had a lot of closures. That's fantastic, isn't it? Everything closes early. Long, right? Yeah. So like day trade, swing trade. Okay, long. I got you. Like long-term investment. Yeah. So I like SoFi long-term personally. I've been buying SoFi down in the $5 area. So like I've been buying SoFi throughout the entire year. Pretty much 2022. I was starting to add and buy SoFi at $8. I was getting in down here in the low fives. I bought a little bit more about a month ago when the CEO released that filing that he had acquired like 1 million shares, which was like a $5 million investment just a few weeks ago. I think it was a few weeks, maybe 30 days or so. But yeah, I was actually buying more SoFi when we saw that the CEO was stepping up and acquiring more shares of the stock. You know, a $5 million investment, that's huge. That's a pretty big investment after the stock's been beaten down, you know, from 25, 24 all the way down to, you know, 424. So, I mean, overall, I own SoFi long term. I've been buying these bottoms for a very long time, for pretty much the past 8 months. I've been buying these bottoms here on SoFi. What's the inverse of the SPY? Yeah, so you got a couple different ETFs, inverse ETFs on the SPY. So you have SPXU, you got like SDS, SPXS. They're going to be inverse ETFs against the SPY. Now you would have SQQQ, which is the inverse ETF for the Qs, right? So if you want to trade an inverse ETF long as the Qs are dumping, you could trade SQQQ. That's a good, very popular inverse ETF against the Qs. Is SoFi considered a penny stock? So everybody has their own classifications for penny stocks, right? Some people's classification of a penny stock is under $1. Well, you're correct. You're in the pennies, right? My classification for a penny stock is low float, under 20 bucks. 25 bucks, 20 bucks, low float. That's when I use the term penny stock. It's a small cap stock. So some traders would push back and say, no, it's not a penny stock. Some traders would say yes, because it's $5. I consider it a penny stock. Everybody's different as far as what they consider a penny stock, for example, to be. And over the 7 years of my trading, I've always classified a penny stock as a volatile, low float, cheap stock under 25 bucks. A stock that could rip big. It's a low float. Small market cap, that's what I classify as a penny stock. So, I mean, I wouldn't really call it a penny per se, but, some traders would push back and say, nope, it's a penny stock, bro. What are you talking about? You got a couple like 1x and 2x for the SPY. What you can literally do is just go to Google and type in popular inverse ETFs for the SPY, like SPY, and it'll actually give you a list. Maybe even some of them for the like Investo QQ. No, what's the I'm running a brain fart right now. But anyway, if you just type that in, it'll actually take you over to like a web page that highlights all of the inverse ETFs. How about Amazon? Andy, I personally own Amazon long term, and I actually just bought Amazon for my daughter's custodial account just last week, believe it or not. Right before Amazon had that big rip off that bottom before the break of the downtrend, I was buying some Amazon down here below 100. I was buying some Apple as well last week, not in my account, but in my my daughter's custodial account. I was buying some off these lows. Just last week. So like, I like Apple. I like stocks like Amazon. I like, some riskier 5-10 year out investments like Meta, for example. I like Meta and what they have going on. I personally like Unity Software. I mean, Unity is absolutely getting beaten down. Unity has been crushed, but it's a high risk, high return opportunity for me. As it's one of those just metaverse plays that I have, one of those metaverse related stocks. I mean, some stocks that I like, some people don't like for their reasons, right? I like Unity. I like DraftKings. I own Roblox. I own some of these really, really high risk stocks that could yield really, really high returns. But I also diversify my account types. And I also have like a Roth where I only buy like really safe stuff, like where I buy Ford, right, where I buy some Amazon, some Apple, the SPY, and the Qs, right? I'm not taking the DraftKings positions and the SoFi positions in my long-term retirement account. I want those safe, steady movers. Maybe something like Ford that pays a dividend. Maybe something like Apple that pays a dividend, right? That's what I do on my longer-term account. Those safe, slow movers that pay a good dividend, that have consistent year-over-year growth. They have strong balance sheets. They're innovative. They'll be here in 20 years. I think Amazon's not going anywhere. I don't think Apple's going anywhere. Those types of quality companies into my longer-term retirement accounts, and then, my daughter's custodial accounts as well. Then I have a separate account where I get involved in some more riskier investments that may go complete kaplunk and bankrupt into zero, but I still like them and I still want to own a little bit as a riskier type of hold. Those are going to be stocks like Unity, things like Datadog, DDOG, things like CRM, Salesforce, right? These are all companies I like. Square is another company that I do like long-term. Block, but they're considered, higher risk. SoFi, higher risk. DraftKings, Penn National Gaming, PENN, right? Higher risk. DraftKings, higher risk. Roblox, higher risk. Meta, even right now, higher risk that they sunk all that money into, the metaverse. But I think I'm definitely betting on something good there. But anyway, that's kind of how I diversifying how I kind of spread out my eggs into like different baskets depending on, my goals for those types of accounts personally. KO, Coca-Cola. Yeah, KO. Coca-Cola. No, I don't personally own any KO, Coca-Cola. So we have like 2 minutes. So I'm going to end it right here for you guys. All right. I had a couple emails come through yesterday, and it's Friday, and I'm always feeling, for some reason, generous in giving on Fridays. I don't know why, especially on Friday the 13th. But anyway, I had a couple emails come through asking when the next discount was going to be, because a lot of traders missed that massive discount that we dropped end of the year when we had like 20 new members join, and they saved a crap ton on the membership. Those that have been in the streams for a while, those that have been engaging and participating, and those that already know that this is the community they want to be a part of. They know this is where they need to be to see the most amount of success. They're just still kind of on the fence. And the main reason they're on the fence is not the program, it's not the community, it's not the trust factor, it's finances. And I never, ever, ever want to see someone not be able to make a decision they want to make over a couple $100, right? I just don't want to see someone sacrificing and not able to get that education they want and be a part of something that they desire over a couple $100. And after I got those couple emails yesterday, I said, you know what? Maybe we go ahead and just wrap up the month, because we're doing limited seats inside of the community. Every single month we have limited seats. Let's go ahead and just wrap up the month early. Let's go ahead and fill those seats, and I'm going to drop a discount for you guys in the YouTube stream today. If you want to put it in your back pocket and make the decision, you can. If not, we're still here for you. When the time is right, the time is right. But if you were one of those few individuals that reached out and it really was just a little bit of a financial thing, I never want to see someone, like I said, not be able to make that decision, a good decision to invest in their education over like a couple $100, right? Your success means more to me than, 20%, right? So I'm going to give you guys a 20% discount today. And that course that's been included with the yearly as well, the course is still going to be included with the yearly as well, guys. So you get the course. That's like $1,000 course. It's completely free. You get the next 12 months inside of the community, the education platform, all that good stuff. You're grandfathered in, and I'm going to throw that extra 20% off for you guys. So if you put in that coupon code as you're checking out for the yearly, you'll see a big $200 savings, and you'll see that $1,000 off. Well, it's actually $898, so like $900 off the course. That's a lot of savings. That may beat exactly what you were looking for to get signed up, to join the team, to start learning how to trade and start seeing, the results and the success that you want to see. So if you guys are interested, let me know and I'll drop the coupon. If you guys are like, yeah, I'm just going to come join these streams in the morning, that's all I need, then hey, I'm glad that I can put together these streams and, help you guys out in the mornings. So I'll go ahead and just drop the coupon real quick for you guys before we go ahead and wrap this session up. Okay, and if I don't see you inside of the community today, you guys are... Yeah, sorry, I'm trying to get logged in and talk at the same time, which is kind of challenging. Excuse me, guys. I am coming down with something. For some reason, I cannot get logged in. Try ADT20. Let's just try it together before we wrap up the stream, guys. Let's just try it together and make sure it works. So you would go over to, again, alphadaytrading.com. Maybe we can just open this up in an incognito tab. Right? Yep. And then you just go over here to memberships. You would click on the yearly, because that's where you're going to apply the coupon, and that's where the free course is. You're going to fill out the registration. It takes like a minute. And let's see if ADT20 works, right? We're going to go ADT20, hit apply. Okay, it is active. So you guys are all set, right? So you go in there to the yearly, go ahead and check out. Make sure you put the coupon ADT20 in. And make sure you hit that apply coupon, and you'll see it down here at the bottom, that 20% off. And you will see the ultimate day trading starter kit. It's been zeroed out. You get it for free. All right. And then again, you guys get access to the platform. If this was something that you've been wanting to do, and join, get access to the video lessons library, the morning stock newsletter, obviously the course that you get with the yearly, and then the daily live trading, the trainings, full access to the chat rooms, all of the features and the functionality within the community. You guys will get access to. All right. So write it down, put it in your back pocket, ADT20, and we look forward to seeing you guys inside of the community. Looking forward to working with you. If you have any questions, you can email me, josh@alphadaytrading.com. But have an amazing Friday. End your week strong and end your week profitable, right? I don't even care if you end your week profitable. I want you to end your week strong. And how are you going to end your week strong? By being a professional trader, doing the right things, making sure you're only trading quality setups, getting prepared behind every trade, just doing the right thing today. End your week strong. If you can end your week profitable, do it, secure those profits, but just walk away on a good, positive note. Enjoy your weekend. Remember, it's a 3-day weekend. The markets are closed on Monday, so I'll see you guys back here officially this coming Tuesday, back here on YouTube, right around 8:15 for the pre-market rundown, and then on TikTok as well for the pre-market rundown. All right, so enjoy your day, enjoy your weekend, take care of yourselves, and I will see you guys back here Tuesday morning. Take care, everybody.